Yes, the title is true. I am selling all my XRP. Now, before you leave a hate comment or you unsubscribe, let me explain. I'm going to address the elephant in the room. See, I'm not selling all my XRP right now. In fact, I believe in the long-term potential of Ripple and XRP, but however, I've set a specific plan for myself to sell my holdings at a certain time in the future, and I'm going to let you know exactly when that is. Now, why would I be doing that? Well, that's what I'm going to discuss in today's video, and this will be the most important video that you guys watch all year long. You see, in a world of investing, especially in crypto, it's crucial to have a strategy and to stick with it, regardless of what people tell you on social media. Crypto is a player versus player game, and the only way that you're going to make it out alive and in profit is by buying low and selling high. And for the people that are saying just diamond hands all the way through, it's going to be the new reserve currency, the new global reserve currency, those people are going to get dumped on. See, if you're in real estate, how do you make money? You buy a house, you buy a condo, you buy land for cheap, and you sell it to someone else in the future for more. Investing is very, very simple. Where it gets complicated is when your emotions get in the way. See, your grandma that bought her house for $50,000 back in the 50s, that's worth over $500,000 or $1 million now, is because she bought low and now she can sell high. And for me, investing in crypto, real estate, it's all the same thing in terms of, asset appreciation prices. So this is part of my overall investment plan. It's not a knee-jerk reaction, to market fluctuations or a FUD, which is fear, uncertainty, and doubt. It's a very calculated move based on my research and my long-term analysis that I'm going to be sharing with you in this video. So if you're here expecting me to, panic sell or to spread fear, uncertainty, and doubt, this whole video about Ripple XRP, you're in the wrong place. I suggest you get off this video. But if you're interested in learning more about my investment strategy, the reasons behind it, and how it might apply to your own portfolio, then stick around, because that's exactly what we're going to cover in today's video. Now, before we do, I want to give a quick disclaimer. See, don't buy, don't sell anything we talk about on our channel because of these videos. Consult your financial advisor. Crypto involves massive amounts of risk, and 90 to 99% of people lose lots of money, if not all of their money, because of various reasons, like they operate off emotions, they don't do their own research, they don't consult their financial advisors, they don't subscribe to the channel, they don't like these videos, they don't watch to the end, they just operate based on, a title or a thumbnail, and then they freak out. So I encourage you, pay close attention all the way to the end of this video, send this to a friend, because if you don't want to lose your hat in crypto, then you want to become the first millionaire in your family tree, then comment 777 below and confirm it by tapping that subscribe button. Let's run it. All right, bull runners, welcome back to the channel. So looking at coin market cap right now, Bitcoin breached above the all-time high, and some jackass is selling off right now, bringing Bitcoin back down to $67,000. And so with Bitcoin struggling to break the all-time high, eventually it will happen and Bitcoin will go on an absolute tear. Now, the market cap of this whole industry is $2.5 trillion. And so when we talk about, a project like XRP sitting at 61 cents right now, everyone wants to know, should they get out of XRP? Should they sell XRP right now? Should they focus on other industries, other sectors, because they see things like meme coins, AI, gaming, a Solana ecosystem absolutely ripping while XRP is staying stagnant? These are all great questions, and in this video, I want to address them, and I want to talk about what's happening right now and when I will be selling the majority, if not all, of my XRP. So BlackRock has filed with the SEC that it will buy Bitcoin ETFs for their own funds. The reason why we need to talk about Bitcoin first is because XRP historically, moves, and the rest of the market moves with Bitcoin. Now, certain projects move after Bitcoin, they move before Bitcoin, but liquidity is growing based on global liquidity, M2, the monetary print orders, what the Federal Reserve is doing, just overall expansion, because as money supply expands and there's no limit on it, then investors are forced to put that money into asset classes to preserve their wealth. Because when you have inflation and you have unlimited printing, price of goods and services are going up, well, how are you going to afford to live in this economy? That's why real estate, that's why the stock market, that's why the crypto market is going up. It's forced to go up. It has to go up because the fiat currency system is doomed. It's a failed
failed experimental system. The dollar hasn't been the global reserve currency for that long, guys. 100 years in the grand scale of how long, human beings have been here for thousands of years is ridiculous. And so the dollar is going to shift to something else, and that's what's happening right now. And so you're priming yourself early to buy low and to sell high. It's very simple. Now, BlackRock filing with the SEC that they could buy Bitcoin ETFs for their own funds, they have 10 trillion in assets under management on the books. That's on the books. That's not behind the scenes what else they have stashed away somewhere. Another 20 trillion of funds used for their Aladdin platform to make portfolio allocations. BlackRock has stated that the optimal Bitcoin allocation is 84.9% of a portfolio. Let me put that again, guys. BlackRock, one of the companies that controls the media, controls the world, is the largest investors in massive companies that basically control your kids and cartoons, is saying Bitcoin allocation is 84.9% of a portfolio. Of course, very few will do this, but we now have the world's largest fund manager telling investors to go virtually all in, is what he's saying. Ernst & Young estimates 200 trillion of institutional assets could not touch Bitcoin until the ETF was approved, and now they can start. And with monetary print orders expanding, with inflation not going back down to the Fed's target, and with the Fed eventually going to have to pivot on their interest rates, which is going to make money cheaper to take loans out, where do you think that money's going to flow, guys? It's going to flow into crypto. Bitcoin first, and then it's going to flow into large caps, like Ethereum, which is happening right now. Ethereum, we called this before. We said Ethereum is the next trade for these institutions because they want to front run the Ethereum ETF. And so Ethereum, no guarantees here, but I'll make videos and hey, we'll see how well this ages. Ethereum will pass 4K, eventually it'll pass 5K, and Ethereum's just going to keep going to the moon. Now that's my opinion. Again, I could be wrong. It could go to zero tomorrow, okay? So that's the disclaimer. Now, XRP will have its day in the sun, but when will that be? Well, let's talk about the charts, because I can give you my opinion all day on what I think is going to happen for price predictions, but I would rather show you facts on what's happened in the past for the charts, because we need to study, the cyclical nature of patterns of what happens on the charts, because charts move based off mass emotions, and every single one of these candles right here is a week's worth of emotion in the market. And you have forgotten what happened 2-3 years ago, 5 years ago. Most people forget what they ate for lunch yesterday. And so when we look at the charts, a chart is a timestamp. It's a keepsake of emotions played out in real time on the price action. So when we look at this, we can see the all-time high for Bitcoin back in 2017 was $19,000. When we got back up to that all-time high, it struggled to break through, just like what's happening right now. Now, on the MACD, the moving average convergence divergence, what we saw happen was the blue line, the MACD line, was above the signal line in orange. When we saw a cross down here, that's when we were breaking out of COVID back in April of 2022. So we were below the signal line. So when we're below the signal line below the zero line down here, and the MACD line is below the signal line, that's when the bears are in control. When we cross, we see a bullish cross, meaning that the blue line, the MACD line, crosses above the signal line in orange. It's signaling that the bulls are stepping in to take over, and we're gonna see price appreciation. Very, very simple, okay? And so when we cross the zero line, meaning the zero line is where you see these red candles down here, and then you see these green candles, up here on the bottom of the screen. The zero line is right at zero, meaning that anything below that is red, anything above that is green. And so when we're below the zero line, the further below the zero line that the cross takes place, the stronger the reversal will be. As you can see down here, when this cross took place, we were virtually at the bottom of $3,300. And so this plays out, every single bear market, where when we see a cross on the opposite side of things, that's after the all-time high was in. Most of the time. Sometimes the cross will happen at the all-time high, but most of the time, a bearish cross, meaning that the MACD line in blue crosses below the signal line in orange, it's after the peak has come in. And so I'm going to be bringing up multiple charts with you guys throughout the course of this video so you can understand, how these markets are going to move, to get an idea from a time frame, because it's virtually impossible to time the exact top, but you can get close to it, right? You can get within 70 to 80 to 90% of the all-time high by watching this video, and I'll be explaining my exit strategy. Now, when we pass the all-time high, the MACD line surged way above where we were before, about 3,216. Same with the signal line. So during a bull run, the blue line, the MACD line, stays above the signal line in orange. Now, when we get to the top of the market, we see a cross happen. We got to the top of the market, we saw a cross happen. So the true high based on the MACD and the RSI and social indicators, because 2021 was a retail fueled frenzy because there were no spot Bitcoin ETFs. It was meme coin mania. We saw crypto.com ads, the Super Bowl ads, celebrity promotions, all of that stuff. So it was a retail fueled market that drove Bitcoin upwards of $64,000. Now, interestingly enough, we saw a cross take place. We saw a bearish cross, which signaled that the true top was in. This top that was the all-time high was the dead cat bounce, because as you guys can see, when the cross took place well above the zero line up here, we saw massive price appreciation past the previous all-time high, and then the MACD and the signal line were well above where it was before because more liquidity was in the market and Bitcoin and the rest of the altcoin market was higher. Now, interestingly enough, is what happened on the actual true all-time high. We saw a lower high taking place on the indicator, and so this was a bearish divergence. And so a bearish divergence is when we're seeing a higher high on the price chart, but a lower high on the indicator, which signals that a reversal is coming. Sure enough, we saw this reversal happen. People thought the markets were going to cool off right here at about $47,000. This is the complacency stage right here. And if you guys have seen my previous videos, you can go check those out. Subscribe to the channel. I talk about the psychology of a market cycle, where once we really start breaking the all-time high, then we're in optimism, belief, thrill, and then we get in euphoria when we're in this stage right here. And then when we get into complacency, that's when people think a recovery rally is going to take place. When we break this neckline right here for this head and shoulders, you can see shoulder, left shoulder, the head, the right shoulder. The right shoulder is really the complacency stage. Then we break below for FTX, Terra Luna collapse, all that stuff. Anxiety, denial, and panic happen right here. Then capitulation and anger happen down here. And then we go into really depression before we break out again. Then what happens in the breakout is we go into disbelief. This was the disbelief rally breaking to retest the complacency high of about $48,000-ish. That's disbelief. What happens after disbelief? Hope. Hope is going back up to the all-time high that a recovery is possible. Now, we might struggle at the all-time high for a little bit here before we break out. You know, we may see a little dip here. Maybe we come down a little bit before the halving, and then after the halving, 6 months later, we break out, you know, because this cycle is different than the last cycle. Because the last cycle, you know, going into Bitcoin's halving, people thought that the market was moving based on Bitcoin's halving, but what they don't realize is the market is more so moving based on M2 and monetary, you know, print orders and what the Fed is doing more so than Bitcoin's halving. And so when we look right here at the MACD, you know, if I were to erase these drawings right here so you guys can see what's happening right now, the MACD line is above the signal line. We saw a bullish cross all the way down here close to the bottom of the market around the capitulation and the anger stage. And so now that we are above the zero line, we're officially in a bull market. It's non-debatable. We're right at the all-time high, but as you can see here, we are not past the all-time high in terms of the MACD and the signal line. We are more so right around here. And what happened the last bull run, as you can see, is when we passed the all-time high, the MACD line and the signal line went well above the all-time high. And so when we were at the complacency stage bounce right here, that's when the price, if I were to look at it, was right at the all-time high. So I'm going to circle it on the chart right here so you guys can see where the MACD and the signal line were. We were still underneath the previous bearish cross of a roughly 2,600 on the MACD and the signal line. And we surged well beyond that when we passed the all-time high. And so based on the past, it's not going to be the exact same, right? Because the price charts look a little bit different, but based on the indicators, it's going to be somewhat similar. And so when we pass the all-time high, the MACD line is going to continuously trend up. The signal line in orange is going to stay below the MACD line. It's going to continuously trend up, and we're going to see something like this take place, where we're going to see the MACD line all the way up here. We're going to see the signal line up here, and then we're going to see a top come in, and we're going to see a cross take place. Now, when am I selling my XRP? I'll share with you in a little bit what I'm looking for on the charts, because we need to bring up other indicators. But this is just like a rough draft, like kindergartner sketch drawing to show you guys like what happens based on the past. The MACD, one of the major indicators to look at. And we can even go all the way back to the bull run if we want to of 2016, and we saw a similar situation play out. If we go all the way back here, we saw a bullish cross happen back on March of 2015 when the MACD line in blue crossed above the signal line in orange. We were virtually almost to the bottom of the market. So the bottom of the market came in, right a little bit before then the cross took place, and then we started working our way out of depression to go back into belief. Now, this belief rally right here showed people that a recovery was possible. It was disbelief. So they thought a recovery was possible. And then, they just didn't believe that anything was going to happen until we started going back up to retest the all-time high. Now we bobbled around at the all-time high for a little bit. We breached above it, then we came back down below it. So the cycle was obviously different than the 2020, 2021 bull market cycle, but the indicator looked very, very similar. Once we got up close to the all-time high, the MACD line was still above the signal line, and it was below the previous crossing point right here. Once we blasted past that, we formed new highs on the price chart, and we also formed new highs on the MACD when the price saw massive appreciation. And so BlackRock, because BlackRock is giving Bitcoin the green light, I'm expecting this to see massive amounts of liquidity flow into the market, and for the MACD line to go well above and the signal line to go well above the previous high of where we crossed back here in April of 2021. We are going to pass this high, and it is going to be absolutely glorious. Now, to sell my XRP right now is the most stupid thing that you could do. It's like your grandma buying a house for $50,000 and then selling it for $45,000 a year or two later. I'm going to be holding this for a while, this bull run, and I'm going to be looking at these indicators, and I'm going to be explaining what I'm seeing. Now, also on the RSI, I want to see a divergence take place where once we get towards the tail end of this bull run, roughly quarter 3 to quarter 4 of 2025, like right around September-ish of 2025, I'm going to be looking for divergences, meaning that we form a higher high on the price chart, and then we start forming a lower high on the relative strength index. We would also form a lower high on the MACD as well too. And so just on the left-hand side of the screen, as you can see back here in April of 2021, we formed the first peak at like 65K for Bitcoin, but the RSI had already peaked out above 90. So when the RSI breaches above 90 to 100, it doesn't necessarily mean that that's the best time to sell, because as you can see back here in December of 2020, the RSI for Bitcoin on the weekly chart was at 94, 95, but the price for Bitcoin was only at $41,000. And so the first run up, the relative strength of the price action means that it's running up faster than it did in the past. And so the RSI peaks out, at 90 to 100, then we see a dip and a correction. So the first time to take profits, right? Not the time to sell everything, is when the RSI breaches above 90. That could be a great time to take profits. And if you have like 3 to 5 different take profit zones for yourself, so you're not just lump sum selling, trying to time the exact top, but you're more so dollar cost averaging on the way out just as much as you would dollar cost average on the way in. Like we've talked about in previous videos, when I give you the 5 top tips of billionaire investing strategies, you're doing the same thing on the way out. And so the first time that I will consider taking profits in the market is when I see Bitcoin's RSI above 90 on the RSI. Now the MACD, I'm not so much going to be looking at the MACD at that period, because as you can see right here, it's difficult to know, when that cross will take place for the MACD, because if we move the chart over here, we're in an uptrend on the MACD, so you can't really tell how much higher it's going to go, because it surged well beyond that to 11,000, when right here at that first peak, we're at 4,000. So you just don't know on the MACD. So that's why we need to use the relative strength index, because the relative strength index on the weekly and on the monthly. On the weekly, when we're above 90 to 100, that could be a good time to take some profits. Because as you can see right here, Bitcoin went upwards of $42,000. Then we saw a 30% correction. So let's say you had $1 million portfolio, and at this period, well, if you took some profits on that, that's a smart move, because to go from $1 million to $700,000 in less than a month, it's a big hit to your portfolio. And so to hedge out 20% of the portfolio when Bitcoin breaches up above 90 to 100, if you're holding Bitcoin, that's smart. We're going to talk about XRP and how this relates in a little bit. So I know I'm speaking kind of quick. I know I'm covering this information fast. That's why you want to watch this multiple times. But a divergence is going to be the major key to show me that the top is in, where we form a higher high and then we start forming a lower high on the price chart for on the indicator for the RSI, meaning that the RSI is not going to pass above 90 again. So we'll stay above 90 for a bit, And then as you can see here, and when Bitcoin breached $64,000, the RSI was at 73. And so this would have been a good time to sell as well too on the way down, because nobody knows that this complacency dead cat bounce to the true all-time high right here was going to be higher than the actual all-time high. You know, what I was thinking was going to happen, and where I was selling some of my crypto was right here at this bounce, because I thought, and this is what it looked like to me, I thought this was the complacency stage, and I thought we were going to do something like this a little bit earlier. That's what I thought was going to happen in the markets, but I was wrong, you know, and it's good to be wrong, because on this next bounce up, I was like, whoa, okay, well, hey, you know, that's even better, because I was selling my Bitcoin right around here, right around $57,000 is when I was selling my Bitcoin. So in the altcoin market, you know, what we see is we see altcoins run after Bitcoin. So Bitcoin is the first sign that the top is in. Then that liquidity starts to flow into the rest of the altcoin market. And we just see people get absolutely drunk off of these projects that, you know, don't really have any rhyme or reason for why they're going upwards of, you know, $1 billion, $2 billion, $5 billion, $10 billion, $50 billion market caps. The valuations just get astronomical, just like in the dot-com boom. And so when we see Bitcoin forming a lower high on the RSI, on the weekly and on the monthly, and we see a higher high on the price chart, and we are closer to September of 2025, that's a signal that the top is going to be in. Now, on the right-hand side of the screen, we saw the same thing play out for XRP. Now, the last cycle, XRP was suppressed, and so this cycle, majorly suppressed by the lawsuit. This cycle, right now, there is some price suppression happening for XRP while these other projects rally, but XRP is coiling up to make a massive move. And when that massive move will take place, will be in the later stage of the bull run. And so when we saw the top come in for the true top for Bitcoin, based on social and retail indicators, was in April of 2021. When the top came in for XRP was April of 2021 at the exact same time. Now, the bull run of 2017 was different. The top of XRP came in 21 days after Bitcoin's top came in, but we saw the same thing play out on the indicators, where we saw a divergence. We saw a higher high take place on the price chart, but we saw the RSI peaked upwards of 86 right here when before the lawsuit at 75 cents, came down, and then overseas trading volume pushed XRP's price up nearly of $2, but the RSI could not pass the high point of 86. So we don't necessarily need to go up to 90 to 100 on the RSI for XRP, but I look for that on Bitcoin. You know, anything above 80 is good, right? Anything above 80 towards the later stage of this bull run. On the bounce for XRP towards the real high of the 2021 bull run, the RSI was at 78. And then we saw the RSI just slowly trend downwards. And the price right here, $1.30. So once I see this start to happen, where I see one lower high, then I see another lower high, then I see another lower high, and the price chart then struggles to break to a new high, and we see something like this take place, this is when I will be taking the majority of my profits in 2025 for XRP. So I'm not really going to be selling that much on the way up. I might be selling like 20 to 50% of my portfolio, but on the way down, when I see the divergence take place and I see the RSI struggling to make a higher high, that's what I'm going to be getting out, because you miss a lot of the profits on the way up if you just sell when the RSI is above 70. For example, you know, as you guys can see right here, when XRP went from 22 cents to 75 cents, a lot of people sold all of their XRP right here, and they wouldn't know to buy back in at 15 cents. But then XRP ripped up to almost nearly $2. So if they just would have waited, if they just would have held and saw this right here, this divergence take place, the RSI form a lower high, then they could have cashed out right up here and then waited for the RSI to bottom out, waited for the indicators to form a bullish cross down here on the MACD as well too, and bought back in here at the bottom below the zero line. So what we wait for is a cross as well too, to see a cross on the MACD. As you guys can see, a cross took place up here, and XRP was at $1.40 right before that cross. And so that's another good sign as well too, to have both of these indicators stacked together, because on Bitcoin's price chart, we were also forming another divergence on the MACD. We saw another cross take place, and then we also saw the RSI at 67 now. And so this would have been another good time to take profits on the way out of the markets on these divergences. That's why bearish divergences are really important at the tail end of a bull run. Same thing for XRP. You know, we were forming lower highs on the MACD, lower highs on the RSI, and then we are forming a higher high on the price chart. Now, the real key here is when we pull up this chart as well, looking at Bitcoin on the weekly, XRP on the weekly as well too, back during the last bull run, when Bitcoin topped out upwards of almost $20,000, XRP saw a rally with Bitcoin to 84 cents, but 21 days later, XRP really started to run and the RSI went from 83 upwards of 96. And then we saw the real price in for the price chart. And then for the MACD, we saw the cross take place, this bearish cross. Then we were officially in a bear market. And so, for example, a lot of people, they sold over here when XRP was running upwards of 12 cents, 26 cents, 30 cents. And then they were selling through this whole stage right here, when Bitcoin was at like $3,800. So they were selling too early in the market because they had PTSD and they thought the top was in right around there when we had further price action to the upside. So if they would have waited, you don't need to catch the exact top at like $3.33, because if you even sold when the cross took place shortly after that cross, you could have sold it at $1.14 rather than selling at 19 cents. Does that make sense? So we wait for a good chunk on the other side. Now, to sell 20% of the portfolio right here is not a bad move, especially if you bought all the way down at like 0.006 back in January of 2017, somewhere around here. To sell at 37 cents, you're in profit. So as long as you're in profit, unrealized gains in crypto doesn't mean you're making any money, because if it goes up and it comes down, you don't sell anything. You didn't realize any of those gains because you were diamond handsing all the way to the bottom and you were round tripping your bags. So don't round trip your bags, guys. Don't round trip your bags. We look for Bitcoin to be upwards of 80 to 100 on the RSI. As you can see right here, when Bitcoin was right at 90, that's when Bitcoin was at the all-time high of $19,000. Now, this cycle was a little bit different because the RSI just bobbled around between like 90, back down to 50, to 80, to 60, to 81, to 62, to 89. So to say that it's going to be a divergence this bull run, it might not be. It might be a combination of both. It might be something completely new, but we look for these crosses on the MACD because we saw a cross right here take place. We saw a cross right here take place, signaled that the top was in. And then on the way down, that's where we can be hedging out as well too, because it takes time to see the bear market fully depreciate to the bottom. It takes time. It takes a year to go from top to bottom. So selling on the way down is arguably sometimes better than selling on the way up, because you don't know how high we're going to go. Let's say XRP does go to the price predictions that everyone's saying. It starts to go upwards of $50, $100, $150. If you sold everything at like $5 or $10, then you're missing the way down. So if XRP goes up to, let's say, $100, hypothetically speaking, I'm not saying that that's going to happen, but it starts going down to 70, then 50, then 40. Well, if you're selling at $40, that beats selling at $5. Does that make sense? Even though you didn't catch the exact top of 100. So we look at these indicators and we look for these bearish crosses that take place on the MACD. We look for divergences as well too. We also look for the RSI to make lower highs. That's what that means. And then we look for anything above, 70 on the way down is a great exit point, because then the lower high, the next high below that is like 61. The price is a little bit lower. Then it drops, it bounces up, drops, bounces up. These dead cat bounces, you like throw a cat off a building, it bounces once, it comes as high as it could, the next bounce is lower, the next bounce is lower. And so we try and time that first bounce back up on the complacency stage on the other side to be hedging out on the way out. That's a real key there. Now, also a real key to understand is the macro market cycle based on total 2, which is the crypto total market cap excluding Bitcoin on the monthly chart. Super important that we look on the monthly chart, because if we go back to the high of January of 2018 and we measure to the high of November of 2021 for the altcoin market, it was about 1,400 days, so about 4 years. Now, if we were to measure the same time frame from the high to the high, that's why my hypothesis is that the high for the market will be roughly around September-ish of 2025. Now, it could come in before, it could come in after that, but around that time frame, within like 3 to 6 months, is when I believe the price of the majority of the assets in the altcoins that you're holding could be higher. That's what I believe. Now, the real key here too as well is put the RSI in the monthly, and it gives us a stronger indicator of what to look for. And the main indicator to look for is when the RSI breaches above 70, then we're just really starting here. I want to see the RSI above 80 to 100 before we really start forming these parabolic blow off tops of these massive green candles. And so the fact that we're still below $1.7 trillion, which is the high of November 2021, the fact that we're still only at 69 on the RSI tells me that we're just getting started. We're just getting started. Once we see the RSI do something like this, breach up here, we might see a little correction period coming down, and then tail end of 2024, 2025, we start coming up here, and then we do something like this. This is what I'm going to be looking for. I'm going to be looking for something all the way up here, and if it doesn't happen, so be it. You know what I mean? Hey, we had a fun run. If the market just comes down right now, and we just see massive tanking in global economy, we see World War III, we see stuff happen. You can't predict for that, right? So we're just looking back to the past, and we're seeing when we're up here on the RSI. We also can pull up the MACD as well too, moving average convergence divergence, and we see when we see these crosses take place, it doesn't mean that that's the top. It means that we're on the way down. So to be able to time the exact top, virtually impossible. To time the complacency stage is when the cross took place. And so we saw this bearish cross happen right here, the MACD line cross below the signal line in orange, and that happened on March to April of 2022. The market was at $1.2 trillion. This was the complacency stage. People thought that a recovery was possible, but yet the indicators showed that the markets were done. We were in a downtrend on the RSI. The RSI was at 80 on the RSI. It couldn't even make it back up to 93. And then the indicators were showing a massive, massive cross. And so that's what I'm going to look for as well too before I hedge out the rest of my portfolio is total 2 to be showing a bearish cross. Now let's look at the last bull run. Let's see on the MACD if we saw the same thing happen all the way back up here. Well, when the top was in, we saw a cross happen after that. And the cross took place when the market was at $130 billion. And so to catch the exact top at $480 billion, very, very difficult to do. But if you were to catch this complacency stage bounce right here, right before this cross was happening, you saw the MACD line turning over and the signal line getting closer to the MACD line. It's kind of an indicator that like a cross is coming, right? So you can see it happening where you see it get closer and closer and closer. The blue line's turning around, the MACD line, the signal line's coming up, a cross is coming. Well, this complacency stage, we could see that happening to 260 billion. So it would have been smart to hedge out right here because selling at 260 billion on the way down is like selling at 260 billion right here on the way up as well too. And so that's another key. You don't need to be selling on the way up. You could be selling on the way out of the markets and be exiting the parking lot after everyone's left. You either leave in the third quarter of the game to beat the parking at the basketball game or the football game, or you leave after everyone's left and then you just wait for that last little wave of traffic and you enjoy your drink in the game chatting with your friends still after the game's over and everyone's walked out. You can do that as well too. So that's another good strategy for you guys that we're going to look for. But 1,400 days from the top, that's a ways away. I mean, we still have about 550 days left until the top of the market. So we have well over a year before we see the appreciation of these projects. Now, another thing I'm going to be looking for is fundamental news of what's happening within the banking sector because banks are failing again. New York Community Bank stock trading was halted after crashing 42% just a few days ago. And then Jerome Powell came out and he said this.
There will be bank failures, but this is not the big banks. If you look at the very big banks, it's not a first order issue for any of the very large banks. It's more, smaller and medium sized banks that have these issues. We're working with them. We're getting through it. I think it's manageable is the word I would use, but it's a very active thing for us and the other regulators, and it will be for some time.
Thank you.
So when Signature Valley Bank failed, Silicon Valley Bank, all these banks started collapsing. That's when we saw Bitcoin rally upwards of like $30,000 and money move into crypto. And so with more banks failing and Jerome Powell confirming that more smaller banks are going to be failing, but the big banks are safe. The big banks are getting into crypto. So alt season hasn't even started yet. Also, as long as Bitcoin dominance stays above 50%, you have an amazing opportunity to make life-changing money this cycle because that gives you more time to back up the truck for the dip. So when we look at Bitcoin's dominance and we see what happened in the past, when Bitcoin's dominance dropped from 90, let's go all the way back to the last bull run, when we got up to the all-time high for Bitcoin at about $1,200, Bitcoin's dominance was still upwards of 96%. Once we passed the all-time high, what happened there was Bitcoin's price went up, but the dominance started coming down because more money was flowing into altcoins and altcoins were outperforming Bitcoin when we passed the all-time high. Now, another key to understand here is during the last bull run, when Bitcoin passed the all-time high, Bitcoin saw a period of, I think it was like a week or a month or something like that if I were to measure. Yeah, it was 28 days where Bitcoin rallied first and Bitcoin's dominance was topping out at that period. Then when Bitcoin's dominance topped out in January of 2021 and saw that correction, Bitcoin's dominance came down. and Bitcoin was already at like $36,000. It had one little last pump up to 60+ thousand, but then the altcoin market went crazy. And so what we could see this bull run is something similar take place as last bull run, where Bitcoin runs first, just like it's done in the past. Bitcoin starts to breach the all-time high. We see Bitcoin's dominance like moving upwards of 58, 60%. And then once Bitcoin's dominance cools off for a little bit and the price takes a little chill pill upwards of like $100,000, maybe we go up to like 90,000, then we come all the way back down to like $70,000 or $80,000 and we do a dip like this. Maybe that happens. Then that's when I would expect Bitcoin's dominance to start trending to the downside and for altcoins to start going absolutely crazy, is when Bitcoin cools off for a little bit, just like it happened during the last bull run when Bitcoin cooled off from $42,000 to $29,000. That's when we saw the dominance go from 73%, all the way down to 39%. So when the dominance is dropping drastically, altcoins are going to be going parabolic. And so behind the scenes right now, guys, Ripple is gearing up for this rotation of liquidity. Here's a new photo of banks, institutions in the XRP ledger, custody and liquidity provider, right? Web3 banking landscape. There's traditional banks, in many cases, front-ending crypto banks and fintechs. There's digital asset banks adopting the tech from technology providers. There's fintech intern exchanges, aggregating white label solutions, and they're aggregating white label solutions with partners through these companies. Then you have technology providers, blockchain custody, liquidity providers, KYC, AML solutions, and then legal advisors. And so Ripple right here is a technology provider along with companies like Medico. You have Ledger, you have other massive companies in the list that are partnering with these companies. And behind the scenes, retail's not really seeing that unless they're watching these videos, subscribing to this channel, but they're getting ready for that liquidity flow. And also when we go to Certic, we can see the XRP ledger is the best in the biz. It's the AAA. It's a 94 out of 100, guys. The fundamentals is an 81, operation is 95, governance 95, market 95, community is 77 because the community's pissed right now, but the code is 95. It's a AAA. It's in the top 10, arguably the top 1 percentile. It's excellent. It's one of the best projects in the space. But the reason why the price action doesn't show that yet is because we haven't seen Bitcoin past the all-time high yet. We need to see Bitcoin past the all-time high. We need to see Bitcoin's dominance drop. We need to see total 2, which is the entire altcoin market cap, past the all-time high. We're not even really that close. We're at 1 trillion. We need to go to 1.7 trillion, which is another 2x from here to pass that. We need to see more liquidity flow out of the banks and into the crypto market. We need to see the Federal Reserve rotate on their interest rates and start lowering rates. We need to see indicators like the RSI trending above 70. We're at 56 right now on the weekly for XRP. Look at the MACD and the signal line right here. We're right at the 0 line. We're not even close to the high of 2021. And so we've just been bobbling around where the MACD line crossing below the signal, going above, crossing below, going above. Once the MACD line comes well above the signal line and stays above it and XRP makes a massive move, then it's all gas, it's no brakes. So until then, we're going to be backing up our truck all the way to the bank, diversifying this industry, grabbing the bags, packing them and stacking them, leaving no bags left behind, because we believe the spending power of the dollar is going to keep going down in value. That's a fact based on inflation. Blockchain technology, distributed ledger technology, and cryptocurrencies are going up in interest. That's the truth. And together, you know where we're going? We're going camping on the beaches of the moon. Now, I made a video yesterday, guys, about how to spot top 10 projects before they go viral and before they see massive liquidity injections. And if you want to get access to that cheat sheet, which is our free top 10 meme coin checklist right now to discover the next 100x crypto, then all you have to do right now is go to bullrunners.com, click the button on the page, put in your best email address. You guys will get access to that checklist along with a in-depth video that walks you through step by step those 10 steps, how to be able to spot these projects in any sector. It's just that the meme coin sector right now is the most popular. Then check that out, bullrunners.com. I will see you on the next video. As always, you know what to do. Stay bullish.